Hello and welcome to a CMS Forex morning brief. I'm your market analyst, Nick Nassad. Today is Tuesday, June 8, 2010, around 10 a.m. Eastern. One of the main stories from overnight was the pound sliding on a warning from the Fitch ratings agency. Fitch says that the UK will need to speed up its budget deficit cuts in order to protect the nation's top credit rating, something that the new Prime Minister David Cameron has laid out in statements yesterday. One of the worrying figures is that government debt interest costs may reach £70 billion or $101 billion in 5 years, up from £31 billion in the last fiscal year. The UK is lagging behind other European countries in publishing deficit reduction plans as investors concerned over government debt loads increase, Fitch said in its statement. The scale of the United Kingdom's fiscal challenge is formidable and warrants a strong medium-term consolidation, the press release said. Again, from the release, with other European sovereigns strengthening their fiscal consolidation plans and market concerns about sovereign risk in advanced countries increasing, both the size of the UK deficit currently projected for 2011 and the failure to reduce it to 3% of GDP within 5 years are striking. Taking a look at the pound-dollar pair, we see that following the release of that warning, we were around the 1.4520 level and actually rallying in overnight trading, but then during the rest of the European session, we slid rather sharply, pairing all of our gains from yesterday's session and falling below this support at 1.44, and as at the filming of this video at around 10:15, we could see that the pound is sliding even further, testing currently the 1.4358 level. Zooming this pair out, we see that our May 25th low may now be the next target, which is around the 1.4250 area, and that is close to the consolidation zone. That is the support for the consolidation zone we had here between the sessions of May 16th and around May 27th. So whatever upward momentum the pound may have had during this run here prior to reaching 1.48 has now fizzled, and if we plot a Fibonacci retracement of our rally from May 25th up to our high here and June 2nd, we see that we have dropped below the 76.4% retracement, and we look set to retrace 100% of this full move. If we take a look at the pound-yen pair, here too, we see the pound losing its gains from yesterday's session, and currently we test that support at the 131 level. We're also breaking this upward sloping trend line after having broken this trend line earlier in the week, this sharper rising upward support trend line. We have an important level of support at the 130.70 level, our lows from last week, but also our resistance here in the week before that. So we may be coming to test this level very soon in the early New York trading session. And if we plot a Fibonacci retracement of our most recent upswing from May 25th up to our high around 136.30 on June 3rd, we see that this support is also our 61.8% level, and if we break our levels here, we could be looking at a move towards the 76.4 area. Finally, in a look at the euro-pound pair, zooming in, we see that we have broken a trend in which the pair was moving in favor of the pound, and we had set a low around 0.8211 in yesterday's session, but now we see the pair rallying in favor of the euro, and we're now testing the 100 period simple moving average in our hourly chart. This also means that we have broken a downward sloping level of resistance in the pair, which also corresponded with our 50 period moving average in the last two sessions, and so we've broken above that at 0.8250, a bullish sign for the pair. We have a bit of ways to retrace this downswing the last 2 weeks we have seen, so we moved above the 23.6% level, and perhaps we're looking to test this 200 period moving average at the 38.2% would be our next level of resistance, which corresponds to our high on Friday's session, but also the next level will be our 50% level at 0.83 around 78. So we'll see if we are able to test these levels later today or perhaps throughout the rest of the week. So the pound is being pressured following that Fitch ratings warning, and we'll see how the rest of the day shapes up for it. This has been a CMS Forex Morning Brief. I'm your fundamental market analyst, Nick Nassad, and I'll see you later for the full daily video recap. Till then, good trade.